Mr. D.K. Joshi is Chief Economist with CRISIL. He's joining us right now. So you're highlighting something which has been in focus for the last couple of months, which is basically, remittances from Gulf countries sort of starting to slow down. We focused on this, I think, since the second quarter of last year when oil prices started falling steeply. And we have the full year numbers now. Could you just put out the numbers for the full year, financial year 16, and how they stack up? I guess the state which is hit the most is Kerala.
Yeah, I think the decline in remittances is very, very mild, as of now, and it's only 2.2% down compared to last year. But I think if you look at a broader picture, I would say that the remittances out of Gulf have been fairly resilient because and they have seem to have a very low elasticity with respect to the price of oil. So I think so far so good. But if oil were to dip again and remain low for an extended period of time, then the pain in the Gulf countries would accentuate, and that will start hitting remittances slightly harder than what's happening currently. And now I think the other side of the picture is what's happening to the net external position with respect to GCC. We also trade a lot with the Gulf coordination countries, and that is where I think we have had maximum gains. The trade deficit with the GCC has come down by 44 billion over the last 3 years. That's because we import a lot of oil and the oil prices have fallen very sharply. Our exports to GCC have dipped, but the imports have come down even more sharply, and that's caused a massive reduction in trade deficit. So I think the next external position with GCC has actually improved. We used to have a deficit of $16 billion in 2013-14, and we today have an excess of about $22 billion in terms of flow of capital. So I think the point I wanted to highlight here is that if the oil prices were to go up again, then the benefit that we have seen in trade, reduction in trade deficit, that will disappear, and the remittances won't shoot up because, as I said, they are less elastic. So I think the greater risk from oil price increases is that the trade deficit with the GCC will start worsening again.
But remittances could improve, I guess, right? I mean, over a period of time, these things take time.
I think,
but you also said that remittances per se don't have, are largely, they're not that elastic. There's low elasticity when you put them and compare them to where oil prices are.
That's right. And I think that's the World Bank study that we've used. I think they have computed the elasticity at 0.1%. So if oil prices were to fall by 1%, the remittances would fall by 0.1%. I think GCC accounts for only about half the remittances that come into India. We have other sources of remittances also. I think if I were to quote the World Bank study again, I think they believe that the remittances from other sources, because the US economy is on a stronger footing, Europe is also gradually recovering, so the remittances from that part of the world could strengthen. So I think overall we are okay as far as I think 2016 is concerned. But I think a lot hinges on how low the oil prices remain, and I think 1 or 2 years, I think, is something that we can withstand. But if oil were to again fall and remain low, then I think obviously the remittance flow will also get impacted. But we are not near that situation currently. And for 2016, I would say that India is more likely to retain its number one position as far as the remittance flows are concerned.
Have you, have you looked deeply at what this could do to a specific state like Kerala?
No, we haven't gone that.
In the overall scheme of things, it doesn't make that much of a difference, you're saying, but it's a big deal for that state, one state.
Yeah, it's not only Kerala. I think the northern part of India also sends a lot of people to Gulf now. So though they may not be as large in comparison to the total population in the northern states, but I think there is exposure in that area also. And these are generally, I think, workers, and I think without alternate sources of income for many of them. So I think we haven't felt the pain as yet, but in specific pockets, I think some pain will start appearing. I think all depends on what happens to oil. And another thing I wanted to point out was that Yeah, that the GCC countries are also trying to diversify away from oil now. I think from a slightly longer term perspective, they are looking into other activities. The Saudi Arabia 2030 plan is one of them, which looks at looking at other sources of growth. So I think they are also trying to move away from over dependence on oil. So I think that's also could provide a cushion over the next couple of years. That's not a short term thing. That's a medium to long term thing. That's happening there.
All right. Thanks very much, Mr. Joshi. Appreciate you joining in with that perspective.